trading. If you are starting your journey as a trader, what are the things you need to know? What are the key concepts you need to know before you start to call yourself a trader? Yeah, so let's proceed. Let's start with today's session. So, things to know, the things that you need to know as a beginner. First, you have to understand the basics. You have to understand the basics. Yeah, you have to understand the basics. So, the basics include first, understand what we call Forex. What is Forex? If we say Forex, what is it? What is the meaning of Forex? Forex is an abbreviated word or an abbreviation. It's an abbreviation for foreign exchange. So this FOR that you are seeing here, it is called foreign, and EX is exchange. That is the full meaning of Forex. Foreign exchange. FOR is foreign, EX is exchange. So what is the full meaning? I mean, if we say foreign exchange, what does it mean? It means you are buying one currency and selling another currency. That is the simplest definition of Forex. You are buying one currency and then selling another. So in forex trading, we trade currencies and we trade currencies, and we don't trade as standalone. We pair currencies. We pair currencies. So you always see two currencies being put together to trade. That is why we have Euro USD, we have GBP USD, we have XAU USD. So we pair currencies and then we trade them. Now we don't only trade forex, we don't trade only currencies. We have some other securities. We have other securities which involve commodities, stocks, indices, index, and a lot. Yeah. So we are just discussing about. I'm good. We are just discussing about forex. So we will be mentioning currencies only. Yeah. So an example of currency pairs include we have Euro USD, GBP USD, XAU USD. I mean, this one is XAU USD is commodity, yeah, but it is mostly traded. So, how does this market move? How does this market make its movement? How does this market make its movement? This current market that is moving, why is this market moving? Why is this market selling? Why is it selling? So, one, market moves based on demand and supply. Okay, so basically that is what causes market movement. We have demand and supply. So demand and supply simply means those who are pumping in money and those who are taking out money. So it is more like producers and consumers. So consumers will demand and then producers will produce goods. So whenever demand exceeds supply, what happens to price? Price will go up. That is why you see when price was buying to the upside, when market was buying to the upside, that means those who were in demand were more than those who were supplying, or the supply exceeded. What am I saying? The demand exceeded supply. That is why price started appreciating or started rallying up. So currently, market is selling. That means suppliers are more than um, demanders. You get it? So it is based on economic principle of supply and demand that move this market. So if it is going up, that means those who are supplying is more than those who are demanding. That is why price is shooting up. And then if it is going up, that means those who are demanding is more than those who are supplying. Yeah. And if it is selling, that means suppliers are more than those who are demanding. That is why we call this market supply and demand. If it is low here, it is called demand. If it is high here, it is called supply. As simple as ABC. So um, that two main concept is what makes this market move. So my market moves because of news, demand and supply and liquidity, but basically demand and supply. So the things that you need to know as a beginner, the key things that you need to know as a beginner, first you have to learn what we call pips. You have to know what a pip is, or you have to understand the meaning of pips. It is an abbreviation for percentage in points. Pip means percentage in point. If you hear pip, it means percentage in point. So basically, that is the movement on the chart. Whenever price moves, this movement, if price move to here, it is called pips. If it moves to the upside, it is called pips. So price movement is what is termed as pips. So if you want to know the from this high, from this very high to here, the amount of pips that price has moved, we just need a tool. We need this tool, this particular tool, then this one. We call it price range. Price range. You use it at where you executed the trade and you extend it to where market has gotten to. So now you can see we are in what 92 pips, right? 92 pips in profit. But if you don't want to use the tool, you can just subtract the value over here. This is the value, this is the value. You subtract it from this and it will give you the amount of pips price has moved. Yeah, so but I think the tool is easy to use. If you use the tool, it is easy to, I mean, it is more like you are using a calculator, so you don't want to stress yourself. Yeah, so pips are the various difference between price, the difference between where price started from and where it has gotten to. That is what gives you pips. The basic definition is the various movements on the chart. That is pips. So guys, keep double tapping your screens and share this live. Yeah, share this live, post it on your story wherever you want to post it. Yeah, let's proceed. Let me add it to my story. Yeah, and then we have what we call lot size. You have to know the meaning of lot size. So basically, no, we are just here. We are just here. We are added to the second point. So lot size is the trade size. I mean, the amount of money you are risking is your lot. It's your lot. Or you can say the amount of quote currency you are using to buy one base currency. You know, these currencies, we call them, the first currency over here is called base currency. This Euro USD, this is called base currency, and this one is called quote currency. This is called base currency, and this one is called quote currency. So always, the quote currency determine how much you can afford one unit of base currency. It is very simple. The base currency value is always 1. So it is always the base currency. Guys, keep double tapping your screens. Let's hit 5k likes. The base currency value is always 1. So it is always the quote currency, which is the USD, that will determine how much you can afford to buy 1 unit of the base currency. So the price of the the quote currency is what is listed here. This is the price of the quote currency. So the Euro USD, this is the price of USD. Currently price is at 2164. This is for the USD, and the quote currency value is always 1. So if you are buying market here, it is trying to tell you that currently you are buying USD at, you are using 2164 USD to buy 1 unit of the base currency. So it is very, very easy and simple, straightforward, nothing complex. Yeah. Now, the lot size is what will determine how much you can afford, or the amount of money you are using to buy a base currency. That is the lot size. It is very easy, nothing complex. Leverage is the money you borrow. That one your broker gives you. Broker, what is a broker? Broker is more like a middleman that grants you access to the financial market. So you, any trade that you execute, it is the broker that is going to send it to the market, and then it will execute it for you. So you send the broker's order to place a buy or a sell. Yeah, the buy or sell you give, it is the order you are commanding the broker to execute for you in the market. Yeah, so those brokers, that is their duty. The brokers, they grant you access to the financial market. So they generate, or they grant you leverage. They give you leverage to execute your trades. So leverage is the money that the broker borrows you so that you can control a large size of capital or a large size of position. Yeah. Let's say you deposited $100 and then you are trading. What you have to do is you add leverage from the brokers. So if, let's say, you used 1:3 leverage, it means your 1 is the $100 you deposited, and the 3 is the money that the broker granted you. So that will be 300 capital that you'll be controlling if like you use 1:3 leverage. So that means your account size becomes 300. Yeah, so that will be the example I can give. Now, what is spread? So whenever you are trading, there are two lines where you execute the trade. There are two lines, right? We call them ask price and bid price. We call them ask price and bid price. So the difference between the ask price and the bid price is what is called spread, and it is always the charges of the brokers fee. That is the amount. That is what the brokers charge you for giving them the instruction to buy or sell in the market. So that is spread. So if you're a beginner, you need to know all these: pips, lot size, leverage, spread, and then what a broker is. Yeah. Now you don't know you don't have to use too much leverage, because leverage can act as two-edged sword. It can amplify your wins, and also it can amplify your losses. Yeah. So if you use too much leverage or a very high leverage, you can easily lose your money. But if you use something cool, which is not too much, which is also not too less, then you can be able to maneuver your way out. So leverage is good, but know how to use it. Yeah. Now let's go to the third point. We are now at the third point. So the third point is about you choosing a strategy as a beginner. So after you knowing the basics, forex, pairs, market movements, pips, lot size, leverage, spread, after you get to understand all of these things, now it is left with the strategy you'll be using to make money. You know, in every business, there is what we call business strategy. You need to know what can make your business a successful one. So you need what we call business strategy. So in this trading space, without strategy, there is no way you can succeed. You can understand what a pip is, you can know this basic stuff, you can understand all these, but if you don't have any strategy you are using, so that one you can't succeed. So you first need to know these basics, and then the third point will be like you choosing a strategy. Now, the strategies, there are thousands of strategies out there, so you just look for the one that suits you. Yeah, that is where you have to find a mentor. That is where you have to find a mentor who you think you can resonate with what he or she is doing. Then you learn the strategy the person is using, or you can try and learn everything yourself. But that one will take time. You do try and luck, and then you just be wasting your time. But if you had found a mentor who has already done the dirty work, the only thing that you do is just pay the price for it and be humble under the mentor and let the mentor take you through. Then you automatically you also have a strategy you are using. So you need to have a strategy. Now, the strategy, we have trend line trading, you following the trend, support and resistance for beginners, buying low, selling high, liquidity slash SMC, smart money concept. This is the strategy I use. Yeah, it is more advanced. I use SMC strategy, but the advanced version of SMC strategy. So if you're a beginner and you want to learn this strategy, you can send me a DM, and then I'll take you through. Yeah, so even April class is coming on 15th. If you want to join April, you can send me a DM and I'll take you through. It was the same strategy I used for this particular sale that we are on. This trade is still active. This trade is still active. I know we are all making money. Those who are in the Telegram group, we are all making money. Yeah. Now let's proceed. After you being able to identify the strategy, now what do you need to do? Practice on demo. It is very, very important. People will tell you not to practice on demo, but I will always advise you to practice on demo first as a beginner before you go live. Now you have identified a strategy. What shows the strategy works? And you can't just test a strategy by going live. That one, you are just trying to set yourself to lose that money. It is not. I would say it is not a smart move. You are a beginner, and you've learned a new strategy. What do you have to do? Just have a demo account. A demo account simply means demonstration account. Just demonstrate it. Demonstrate what you've learned on the demo account first. But what I would say is have a time limit. Have a period where you'll be demonstrating all the things you've learned. So you shouldn't stick to demo accounts for so long. At least 2 months is okay to practice what you've learned. Yeah. So use a demo account first. Focus on execution and not profits. Yeah, just focus on execution. What your strategy tells you, do the same, and just don't focus on the profit. Just focus on the execution. So it is on the demo account that you would build much confidence in your strategy. So build confidence before real money. You need to know what you are doing before you go live, else you will easily lose your money. Now, after practicing, this guy. He is very very important. This guy is very very important. Risk management, risk management, risk management. Now you can have the best strategy in the world, but if you mess up with this guy, you will never get any results from the strategy you have. If you mess up with risk management, your results will be very bad. It is you can't just do away with risk management. Yeah. So first, understand the basics. Second, learn key concepts. Third, choose a strategy. Fourth, practice on a demo. After you identify the strategy you are using, practice on the demo. And then fifth point is risk management. Very important. You see, I have put in it in a bracket. Very important. We don't have 100% strategy. There is nothing like holy grail strategy. So if you find a strategy that gives you consistent wins, then you stick to it and you pay much attention to this guy. You pay much attention to this guy, this risk management. And over time, you will lose money, but then you will make more money. That is how trading is. There is nothing like holy grail where you will win, 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 win without a loss. So if you're a beginner, know that there is nothing like I will take trade and I will not lose a single one of it. There is nothing like that in this industry. You will lose, but if you win big. If you lose small. That is the name of the game. So you see the trade that we're currently on. This is a live trade that we are on. I shared this trade yesterday here and also shared it with my Telegram members. Yeah. So this trade could have been like we could have taken a loss. Even though I have a strategy I'm using, we could have taken a loss. But the fact is, the strategy is proving. So even if I take a loss, by taking 3 4 trades, even one win can grant me um, all the losses I've taken plus additional profit. Now you see, this is the risk management I'm talking about. I have this red side. This tool is called long two. Oh, now this one is short two, right? We are selling, so it is short two. We have this red side being our stop loss range, and this huge side being our take profit range. So imagine you are risking this small, and you are making this big. Know that you are doing something right. Yeah, because every investment that you make, you always invest small and you expect huge returns, or you expect something times two, times one, or times three of your investment. So there is no way you will invest this and you will take profit here. Like you have something like this. You let me do the risk to reward well. So this is a business, right? This is a business. So if you are doing a business and you are investing your money, and you let's say you invested $100 over here, and you took profit at $100, that one you've actually made 100% of your investment. That is cool. But trading is so profitable or so advantageous in a sense that you can risk $100 and get more than 3 or 4 of the $100 and have like 300, 400, 500. Yeah. So if you know what you are doing, you leverage on risk to reward and you make much from your risk per trade. So basically, you need to know what we call risk management very well. Now, how do you practice risk management? First, I would always entreat or recommend a beginner to not risk anything more than 5% if you're a beginner. The key concept is the underlying word is if you are a beginner, you should not risk more than 5% of your account. If you have like $1,000, don't risk more than 5% per trade. But an advanced trader can decide to treat risk management differently. An advanced trader can decide to divide, let's say $1,000, he can decide to divide it into four. And then he knows that he's taking four setups. And if he loses or the fall, then the account goes. But if he wins one, the account keeps multiplying. So risk management is different from every form of trader. If you're a beginner, your risk management should be different from someone who has more than 3, 4, 5 years experience. Yeah. So this is what makes trading interesting. If you are starting out, you should not get your money exposed too much in the market because you have not seen the worst side and the good side of the market yet. But over time, when you have much experience, then you have been able to know what those things that are possible on the chart. So you tend to increase your risk a little. I mean, you have a different model of risk management as of how a beginner will do his or her own. So for me, if I am trading, I use account. How do I say it? I divide the account. I trade based on week. Every week, I have an amount I deposit, and if I might take some couple of trades and I lose all those trades, that is where I can lose the account. But if I win within that week, if I had even one win, I'm up. So my risk management model is different from someone who is now starting out. So risk management for a beginner, you should not risk more than 5% of your account if you are starting out. Always, it is very this guy. It is very always use stop loss. There is no way you should trade and based on hope. Yeah, you should not base on hope whenever you are trading. Use reality. Use what we call the trading is basically uncertain, right? Nothing is certain here. We're basing on probability. It is your strategy that can grant you a little confidence in your decisions. You get it? But as of the concept of trading, it is based on probability. So if you are trading without a stop loss, then you will easily blow your account. Stop loss simply means I am taking this risk. If I'm right, if I'm wrong, I lose this money. If I'm right, take profit will also come in. I didn't add take profit, but I was focusing on the risk aspect. So the risk aspect says I'm taking this risk. If I'm right, if I'm wrong, I'm losing this amount. But if I'm right, give me this amount. You get it? So risk management is very important. Stop loss is what protects you in worst time, of the market. That is stop loss. It protects your capital. So it is very, very important as a beginner. You should always put stop loss. Third point is don't overtrade. So overtrading, what is overtrading? Let's say with this particular sell that we had, we've taken SL, we hit SL and price, and we were not happy about the SL, so we went ahead straight up, took another trade, and that trade also hit SL. SL simply means stop loss. Hit stop loss, and we went ahead again to take another trade. So we want to make the money that we've lost back. That one we are over trading. We are not trading with any structure, and trading should be based on structure. Every company that you attend to, or you go to, there are rules. There are rules in every company. So if you are trading and you don't have, this is a company for you. This is your company. If you don't have rules governing you, you are just like a leaf that the wind is blowing left and right. Because this market is designed in such a way that you will lose your money. So if you don't have any grounds rules or any set of rules that you are following, you will get manipulated and all your money will be gone. Yeah. So you need rules to govern you as a beginner trader. Now, let's talk about the set point. Let's talk about the set point. Let me bring the camera here. So the set point says build a trading plan. Yeah, it is very, very important. You need a trading plan. Include entry rules. If you are entering your trade, what are some of the things you need to see? So your plan will be based on the strategy you learned. Your trading plan will be of the strategy you learned. So the strategy will help you know where to enter, where to exit, but the risk per trade will be your risk management plan. Trading time, that is session. Personally, I don't use market sessions. I just trade anytime I see my setup. Yeah. So you need a strategy to help you build trading plan. Now, the sixth point says build a trading plan, and it is your strategy that will help you to build the trading plan. If you use my strategy, which is the advanced SMC, my trading plan is whenever I am trading, I need to look for two main concepts, either reversal or continuation. If I see the reversal, I execute. If I see continuation, I execute. So that helps me have a strong trading rule to follow. You get it? Yeah, so your strategy will help you to build a trading plan. Now, the seventh point is about psychology. Psychology, control your psychology. It is very important also because if you execute trade, you will see market will go up and down, go down and come up, come down and go up like that till it gets to your take profit. You know, this trade was yesterday. We executed this trade yesterday. We executed this particular trade yesterday, and we first made this profit, right? We made this profit, and price had to go back here. And if you don't have your psychology well checked, you will think that market is coming to take you out. Definitely, your money will be like, let's say you were making $1,000. Price pushing back here, the money will then become like 50 or $60, and you'll be like, yo, I should have taken my profit here. But if you know what you are doing, this pullback will never affect you. You just be patiently waiting for price to continue to the downside, and you wouldn't be focusing on the profits, but then you'll be focusing on the structure, the take profit. I mean, your risk to reward. So if you were in thousand profit and price moved to um, and then your money came back to like 400, you wouldn't be moved. You get it? You wouldn't be moved because you know what you are doing. So now, that is where psychology has to be very strong. You have to have your psychology checked and know what you are doing. So, first, don't chase losses. Let's say you took a loss, it is out of um, unregulated psychology or improper psychology that will make you take a revenge trade. So, don't chase losses. If you don't have correct psychology, if you lose, you definitely want to revenge trade, and it is one of the things in forex trading. Now, don't get overconfident after a win or after you win. Okay, if I know I'm currently winning, but I stay indifferent, I'm not excited, I'm also not sad. You get it? So you just be like, you stay indifferent, you wouldn't be happy, you too, you wouldn't be sad. Yeah, we call it poker face, have poke face or something like that. Yeah, so just stay neutral. Yeah, that is a technical term. Stay neutral. You are winning, don't be extra confident and be like, yeah, I'm winning, I'm winning, I'm winning. So let me add extra position. Then you any pullback can clear all the money that you've made. But as you executed here, you patiently waited for price to play out without you getting too confident and then be like, oh, this trade must hit take profit. So I need to add extra position. Then that is the wrong thing you will do as a beginner trader. So guys, we are left with 1K likes to hit 10K. Let's keep the likes going. Thank you those who've been liking the live. I really appreciate you all. So just keep liking, and let's hit 10K likes. Yeah, we'll finish very very soon. You see, we've now um we are at the psychology. Now we're left with only the 8 points, and then we get out of here. Yeah. So if you are joining this live for the first time, make sure you hit the follow button so that whenever we come here, you don't miss out on the things that we do. And if you want to take part of this community, which is the Telegram channel, it is free channel. We share trades in there. We trade live also. So you can go ahead, join us, and let's trade together. Check my bio. The link is in there. Click on it and join us. Or go to Telegram, search at freepip_s official and join us. We are we have 1070 subscribers, so you can take part and then we do this together. Yeah, now we are at 10K likes. Amazing, amazing, amazing. Let's proceed, guys. Let's proceed. You guys are amazing. So this current trade, this particular trade, we are in this particular trade. I took this trade with my community members. Everybody is making money. Everybody is making money. So if you also want to make money with me, just follow me and then join the Telegram channel. Every single trade, you get it. You get it in the Telegram channel. Yeah, so let's proceed. Now, after you have your psychology checked, where you know what you are doing, you don't chase trade, you don't get overexcited or overconfident after you win, and then you stay disciplined and you exercise patience, then you can call yourself a professional or a good trader because you are not doing the sins in trading. So these are the various sins in trading. Chasing losses is a sin. Overconfidence after you win is a sin. Not staying disciplined, not sticking to your rule is a sin. So if you do those, you will lose. But these things, if you don't chase losses, if you don't get overconfident after a win, if you stay disciplined and patient, these are the things you need to do to win. But if you do the opposite, you will lose. As simple as ABC. So after you have all this checked, now you go live. Go live slowly. So you don't start with a big amount. Start with small capital, right? As a beginner, if you get all these concepts together, you have figured all these things out. Going live, you need to start with small capital. Your main focus should be consistency, not quick money. Your main focus should be having consistent wins, not money. So your main focus should be on consistency. Consistency simply means if I take two trades in a day, can I win all the two trades? And even if I lose one and win one, can I keep repeating that same thing? So you try to have a consistent result. You are trying to have consistent results. So your main focus should be on consistency. Let's say you take five trades in a week. So this week you've taken five trades. How many wins and how many losses? So if at the end of the week you had let's say three wins and two losses, you are okay. I mean you are actually making money. You're actually making money. But let's say you had four losses and one win, and that win that you had, it was not able to recover the losses. That means you need to put in more effort. You get it? So your main focus as a beginner is to have consistency and not focus on money making. If you focus on money making, you will easily lose because every single trade that you take, you will first go in loss before price will come in profit. So if you are focusing on making money and you take a single trade and you find yourself in drawdown, you'll be like, shit, I'm losing. So let me quickly close my trade so I don't lose more. But meanwhile, you could have taken your time to wait for price to play out. Like what we did, oh, the trade that we had yesterday. Let's say you are a beginner and you are taking an entry here. You took this sell. The moment you took this sell, price went into profit, right? You came in profit. And then you saw it going back to your stop loss, went into drawdown. You'll be like, shit, I just saw maybe $100 and now I'm seeing negative $200. So I think I'm losing. So let me just lose this small amount of money. But price has not hit your stop loss yet. Stop loss is what will always make you know whether you won a trade or you lost the trade. So if price moves here and it has not taken you out yet, it does not mean you are wrong. We call it you are in drawdown, but it does not mean SL. You've hit SL. Yeah. So if you saw this profit and then all of a sudden price went back to drawdown, it does not mean your setup has been breached or been invalidated. What you have to do is wait for price to play out. That is why you have the SL. That is why you have the SL there. Rationale behind the SL means if I'm wrong, I accept this loss. And that of take profit means if I'm right, I take this amount of money or I take this profit. Yeah. So for a beginner, you should not focus on money, focus on consistency. Consistency, having consistent wins. Yeah. Now the simple truth you have to bear in mind. Forex is not about winning every trade. You get it? I sometimes take losses. Yeah, I take losses, and nobody is above stop loss. Because this market, you have to be extra smart. You have to be very smart to maneuver your way out on this chart. So if you have a strategy that gives you consistent wins, just leverage on that and then keep repeating it, keep repeating it. So forex is not about winning every trade, but that does not also mean you should not strive. You should not strive to perfection. Yeah. You have to put in the work so that you will limit the number of losses and then increase the number of wins. It is very important. Else, if your losses outweigh your wins, then you wouldn't be making any money. So you always constantly want to push for perfection. But I don't know anybody who has never taken SLs before. We all take SLs, but what gives us the upper hand is we win big, we lose small. We win big, we lose small, and we win more than we lose. You get it? So that is the whole concept about trading. We don't have holy grail. Holy grail simply means you will not take wins all out. We don't have anything like you will win, you will win, you will win back to back, back to back, back to back without taking a loss. We don't have anything like that. We lose, but we lose more and then we win more. That is what trading is about. So if you're a beginner and you are starting out to trade and you don't expect losses or you don't want to take a loss, then you will lose. That is the whole concept. You don't want to take a loss, then you will easily lose. Yeah, but we strive for perfection. Yeah. So losses are part of trading, but then we limit the loss, we limit losses and we increase profit. Now, it's about managing losses and staying consistent. Managing losses simply means every single trade that you take, you have stop loss in place so that if you are wrong on the trade, let's say for this for instance this particular trade, we were buying, right? We were not selling and we were buying. Let's say we picked the buy here, and then we were targeting this high and we had a stop loss. I think I've spent an hour here. Yeah, we will finish very soon. Yeah, let's say we were buying to this high and price started selling and we were not having any stop loss. By this time, look, we would have blown our account. So look at how where price has got into. We would have blown our account easily. So stop loss is very, very important. So whenever you are taking a trade, make sure you have stop loss in place so that if you are wrong, you just accept the calculated risk, and then if you are right, you make more money. It's as simple as it, ABC. So the last key point is it's about managing losses and staying consistent. So since we have our loss here, our loss zone here, and then we plan for it. If we were to take SL, it is a managed SL. You get it? Yeah. So guys, this is the basic stuff you need as a beginner trader. These are the various things you need to know as a beginner trader. Let's do the summary. First thing you have to know, understand the basics. Know what Forex is so that you know the business you are getting yourself into. Now, after you knowing the basics, learn the key concept, pips, lot size, leverage, spread. After that, you go ahead and learn about strategy. What strategy will you be using? So there is no way you should jump. You should never jump. Understand the first thing, and then understand the second, third, fourth, fifth. Everything is system, right? Never jump any one of these. It is very systematic. So if you're a beginner, know that the first thing is understand the basics. Second, learn the key concept. Third, choose a strategy. Fourth, practice on a demo. Fifth, learn risk management. And then the sixth point is build trading plan. So it is your strategy that is going to help you build a trading plan. And then the seventh point is psychology. Now, when you are done with all these, then you go live. You get it? So it is very, very important, guys. So this is what I came to share with you.